Fittingly, we move from markets to farm income. When Tina Barrett from Nebraska Farm Business joined us last year, her surveyed group of producers had a record net farm income of $285,000 on average. That number was drastically higher than the 2009 number of $180,000. But the 2011 average net farm income produced a number that was far and away a record.
You know, another record income, and I really didn't expect to see it. I didn't know what for sure we'd see, but you know, the producers that we work with managed to take advantage of some good crop prices. They had great yields, and we ended up with an average net farm income of about $400,000.
That's a huge jump.
It's a huge number. You know, I look back 10 years and our average was $25,000. You know, we were thinking that was pretty good. I remember the year we hit 40, thinking that was really a great year. So, you know, this is just kind of an unbelievable number. You know, and we got to remember that there's a lot of things that go into that number because we don't try and take a look at their other investments. So, you know, you think about these farms and they have, you know, millions of dollars invested in assets, whether in land or in equipment. And part of this money, you know, this income is a return on that investment. And so we've got to kind of remember that too, that there's an awful lot more than just their time and labor out there earning that $400,000.
And as you mentioned before we talked, there could be some gain in the livestock industry as well, that maybe it's not all on the crop side, that maybe the livestock side caught up and narrowed that gap.
Right. You know, I think there was certainly some of that. It was a much better year from a livestock standpoint than what we saw in the previous couple of years. I think, you know, beef prices certainly took a rise and helped make up for those high input costs that they had been experiencing. So there was definitely some gain to be had there too.
Let's talk about those input costs. The cost of production continues to rise as well?
It does. Our average cost of production for a bushel of corn rose 40 cents to about $3.95. So, you know, we're seeing those, even though we're seeing net income rise, we're seeing those cost of production rises as well. So,
and family cost of living continues to rise as well.
Oh, always a big story, but you know, in our history, I don't think we've ever seen a drop in average family living, but we're up to about $125,000 for family living and taxes, and if we include savings and non-farm real estate purchases, we're talking about $180,000 that's coming out of the farm for family living on average now.
Is there a correlation between that and the rise in net farm income? Do they go hand in hand?
Oh, I think, you know, anytime we see a rise in net farm income, we usually see a rise in family living costs. And I think just the fact that there's more money out there, that, you know, there's been more stuff. You know, there's more houses going up, there's more vacations being taken, you know, there's more money to spend, so it's easier to spend. The drawback is, you know, since we rarely see that drop, if we do see the drop in net farm income, we've got to be watching that family living and maybe thinking that we need to pull that back.
So as we talk about record high net farm incomes, what are we looking at in terms of managing debt that goes along with it?
You know, a lot of times, you know, you think if these numbers keep going up that we would see a significant drop in debt. And we are seeing a drop in debt to asset ratio, but we're not seeing a drop in total farm debt. We're seeing that continue to rise. It's gone up over $800,000 this last year on average. You know, and I went and looked at those numbers and did not see the drop, or there was actually a drop in long-term liabilities. So this isn't real estate purchases causing that debt to go up, but we're seeing that increase in intermediate debt and current debt.
Which means what?
Well, my best guess is that this is a sign of tax deferrals, and that, you know, there's a lot of equipment being purchased and written off with the accelerated depreciation that we've got and being financed, paid for later. The operating notes are probably going up because we're doing more prepaids, holding more grain over to the next year, those sorts of things. Because we just look at that debt level as of the end of the year. So I would guess that we're seeing a trend in tax deferral. In
the Cornhusker Economics, you wrote about cost of production. How has that changed? The importance of it changed from a time when it was an incredibly tight budget to spend with, and now where you have such high incomes?
Yeah, it's certainly a question I get asked a lot as to why farmers need to worry about cost of production right now. But, you know, I think if you see that trend line increasing, we're getting back to where you need to start thinking about that. And depending on where your family living and taxes are, you could easily be getting to the point. I have some producers who are getting to the point where their cost of production, including those two factors, is getting close to marketing prices. And so I think it's really important for people to come back to the reality that, you know, the margin's going to be tight, and we're going to need to watch that on an individual basis, because not everybody's going to be making money, even in crop production.
Right, and I remember the last time you were here, you talked about the competition. And what advice do you give to farmers? Because it is a competition between who gets that next parcel of land, not necessarily in terms of marketing, because that's sort of on your own. But what do you say to them?
You know, I think it's tough because farming has always been a community sort of, you know, thing, but and it's hard to think of your neighbor as your competitor. But when it comes to parcels of land, whether it's purchasing or renting, you really are in competition with those neighbors. And, you know, if you can manage your cost of production lower than your neighbors, it puts you at a competitive advantage for for being able to be in position for that purchase, or that, maybe paying a little bit higher rent, and doing that in a sound financial manner. So, I think as much as we don't want to, it's a factor in production agriculture today.
The USDA estimates net farm income across the country to be $91.7 billion in 2012, down 6.5% from the 2011 forecast.